A bit of talk around this morning about supply chains and the business community being affected out of this new Victorian shutdown. What's your view on this?
Yeah, this is probably, from my view, the biggest takeout from all this. There's sort of this feeling that it's a sort of a Victorian state issue. It's a national issue because Victoria is the largest supplier of particularly retail, like domestic manufactured goods, into states like South Australia and Tasmania. It does also go into New South Wales. We also know that they are a massive provider of particularly meat agricultural products, but it is that retail side you've got to look at quite closely. They are going to see a slowdown in states that have done reasonably well on corona, but are trying to get their economies going again. So South Australia, Tasmania, as I mentioned, were ones to watch, but it also feeds through into Western Australia as well. And they are going to start to see pressure on that sort of provider of imported goods from Victoria, particularly on the retail side, that's going to come through in the economics. It does therefore mean that you're going to get pressure on jobs in those other states as well as they start to see issues around that supply side as well. So it's not just this Victorian issue. This will be felt nationally and particularly in manufacturing.
Okay, so what are we expecting, for the people at home, Evan? Is meat going to be more expensive? I know there's already been a lot of talk about, the prices of lamb driving up. Is this what we can expect to see in supermarkets?
Yes, it is. It's simple economics in terms of the fact that we don't have the same amount of supply that's going to be on the supermarket shelves. It will therefore drive up prices. The example that I think you can probably give, think a couple of, about 5 to 10 years ago when we had the hurricane up in Queensland and knocked out 95% of our banana product, and therefore bananas went through the roof.
That's right.
It's the same principle in terms of what's going to go on here. The supply of meat will come, but it will clearly slow up, and therefore it will drive prices higher because demand will be just as it was with less supply.
Yeah, okay, you're right there. Simple economics on that one. Now as for commodities, they continue to storm ahead of a driver that's driving a new mini boom at the moment, Evan.
It is. Look, we all concentrate on the gold price, and so we should. Gold made another record all-time high. It's now through 2025 US an ounce. But for us, as an Australian-centric point of view, continue to look at things like coal, copper, and iron ore. Iron ore, not only is it holding above 100 US a tonne, it's back above 120. That thirst from China is real. We saw this week that their services PMI, their manufacturing PMIs continue to actually do very, very well. So they are clearly stimulating, clearly trying to get their sort of economy going outside of the coronavirus issue. And it's therefore creating a thirst and demand for iron ore products and coal products. And they are creating that boom. Have a look at Rio, have a look at somebody like Fortescue Metals. They are also powering it. FMG continues to make record all-time highs. Rio is continuing to punch well and truly above 100 US dollars, Aussie dollars. It is because that commodity boom is there. It therefore may give a bit of a cushion in GDP for us, but let's be honest, it's the consumption side that's going to be our problem.
Okay, just finally, markets in the US within 2% of records, Evan.
Yes, they are. So the S&P 70 points away from the record all-time high it made back on February 19. And it is being driven by things that you wouldn't expect. So Disney last night up 8.8%. So everybody knows about their issues they're having with their current sort of Disneylands and Disney Worlds. But what's happening is Disney Plus and their subscription businesses are booming globally, absolutely exploding. And it shows a very big microcosm about what the coronavirus has done globally, which is that we are now living at home but consuming products that we were starting to consume, but now at a level that you probably would have expected in a decade's time. And that's why, if you look in the US, it's basically been driven by online tech companies because their products are now being consumed at record rates.